All right. Hey everyone, welcome to today's live trading session. Now, I know that you guys are here to show up and get better and sharpen your edge in trading, and it's always exciting to impact my knowledge with you guys. It's always an amazing experience. So once again, welcome to the session. Now, whether you're joining us for the first time or you've been a regular participant, you've been rocking with us consistently, welcome again to this session. This is, a place or a session where the charts gets, decoded and where real traders are made. So welcome everybody. Now, before we, go deep into the session or before we start the live session, I'm going to quickly explain to you guys how the chart is set up today, okay, so that everything stays clean and easy to follow. Now, first, only the subscribers can use the live chat. So if you want to ask questions, if you want to participate, just hit the subscribe button, subscribe to the channel, and then you'll be able to send your messages and ask your questions, okay? If you just subscribed, give it a minute, okay? Just give it 1 minute before you can type. It's absolutely normal. 1 minute after you subscribe, you can ask your questions and use the live chat. And another thing, the slow mode is on. So this is just to let you know that you can send, your messages one per minute. So you can send one message per minute. Now this helps us, reduce spam and keep the chat very much helpful, okay? Another thing I need you guys to know is that the setup is quite temporary. We're going to use it to sort out moderation behind the scenes. Thank you guys for being patient with us. I'm going to go over that again so you guys can understand. Only subscribers can chat. So if you want to send messages and ask questions, hit the subscribe button. And if you just subscribed, wait for 1 minute before you can, ask your questions or use the live chat. It's absolutely normal. All right. Okay, so now that that's out of the way and you guys got the information, welcome once again to today's live trading session. Now, if you can hear me, you can see me, let me know in the chat your name and where you're watching me from. Let's get to know you guys and, let's see who's the farthest, who's watching me from the farthest distance. Let me know your name and where you're watching me from. If it's also your first time taking part in an Octa live trading session, you can also let me know in the chat, in the live chat. And while you do that, I'm just going to go over the quick disclaimer and also let you guys know a bit about myself. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or link to this presentation is provided as general market commentary and does not constitute investment advice. Again, I'm trying to get to know you guys, but for you guys that don't know who I am, I'm going to give you a brief introduction to who I am while I look at the comments to see and give you guys, welcome, right? My name is Ambrose Ebuka. Give me a second. I have 6 years experience in the market and I trade with precision, blending swing and scalp setups to stay consistently ahead. My focus is gold, GBP JPY and GBP USD, where I hit above 85% accuracy and I backtest like clockwork to stay razor sharp. I'm going to go ahead and check the comments right now, just so that I can see who we have today. Once again, guys, let me know in the comments your name and where you're watching me from. Welcome everybody. Chuku Nike Nonyelu, welcome to the session. I'm doing great. How are you doing? All right, today's agenda is quite interesting. We're going to look at the economic calendar like we always do. We're going to do an introduction to zone trading, which is a strategy that I use. I'm going to show you guys how that works. I'm also going to introduce you guys to understanding the dollar index, right? DXY and its correlation with other pairs. I would have a little session, a little, introductory session to how you can grow in November. Guys, it's the 6th day. Let me confirm that. Okay, yeah. It's the 6th day in November, right? November is just starting. It's only best I give you guys some tips on how you can be better traders in November. I would have a Q&A session where you can ask me your questions using the live chat. I'll be looking at the live chat to answer all your questions. Once again, guys, welcome to today's session. It's going to last for about 45 minutes, and I always check the live chat to answer your questions. All right. Now, before we even go to the strategy, let's do first. All right. All right, guys. So let's talk about the economic calendar now. If you don't know this calendar, it's the Octa economic calendar. We're going to look at it real quick, and I'll just give you guys a run through of what's been happening and what has happened today before we go over to the charts. I think I should just put that up so that we can just have it on the side while we wait. Let's just close this one. Yeah. So if you're trading without the economic calendar, if you're trading without paying attention to what's happening every day, you're basically walking into a storm with your eyes closed. I like to say that. Think of the market like a big ocean, right? And our price in itself likes to move like waves. Sometimes the wave is calm, sometimes it's wild. And all you're trying to do as a trader is to surf your way through the waves. And the economic calendar or the economic news is basically your wind, right? So the calendar tells you or gives you an idea that, oh, this is when the wind is coming, this is what to prepare for. It's like your weather forecast, it warns you about things that can shake the currencies, like the interest rate decisions, the job reports, inflation numbers, government updates, all these speeches from the major banks from different currencies, from different countries rather, keeps you updated. Now, a lot of traders lose money not because they didn't have a strategy, but because they didn't respect the time a news was being released, right? A lot of traders make this mistake. Imagine doing a perfect setup. Your analysis is on point, price is moving your way. You're probably in the trade and in profit, and then boom, the news hits, your stop loss gets triggered. It happens every day to most traders that ignore the economic calendar. So you want to use the economic calendar because it help you avoid, this unexpected volatility. You also want to use it because you want to understand why the economy and why the market suddenly moves the way it moves. You also want to understand the economic calendar because you want to know what affects each currencies. Okay, each currency rather. And it helps you prepare, not to panic, because you already know what's about to happen, so you prepare ahead of it. So I'm going to give you guys a run through on how you can use the economic calendar. This is the Octa economic calendar. If it's your first time using the economic calendar, I'll show you exactly how you can navigate your way through it. So the first thing you want to do when you're on Octa's website, you want to come to analysis and education, and then you come down to under analytics, you come down to economic calendar. All right, confirm the date. You can set it to today. If you want to look out for the week, you can set it to this week. You can just use this scroll to focus on the particular events you want to look out for. Then you want to confirm your time zone. All right, it has to be in your current location so you don't miss out on the time. And then if you're a beginner trader, you can include the medium and the low impact events. If I go ahead and do that right now, if I go ahead and include the medium and the low impact, you see that we have a lot of events, right? But this is just if you want to get the knowledge, if you want to understand, why it moves the way it moves. If you want to understand what each economic event would mean. But just like the name goes, the high impact would bring about high impact volatility potentially. The medium impact, the same. The low impact, just like the name, low volatility to the markets. Now, today we've had an interesting amount of events that would impact the GBP, the pound sterling. We've also had one from AUD and Euro. I'm going to go ahead and explain to you guys what this means. But in summary, think of the economic calendar like, an indicator. If you're flying a plane, you would not ignore the weather forecast, right? You want to know if a storm is coming before you start to fly. It's the same thing with the economic calendar. It tells you when, these market storms have been scheduled. Sometimes these storms can create opportunities. Other times it could give you massive drawdowns. But when you get to know the one that you're dealing with, it helps you become a better trader instantly. Okay, so as we break down, as I go ahead to talk about these events, each one of them from the trade balance all the way down to the speech, don't just look at it and say, oh, this is just a speech, this is just rate cut. You have to think, how does this affect the country? How could it push the currency up or down? When you have that mindset, it separates you as a newbie trader. from those that actually grow in the business. So let's get to it. Let's go event by event. Now, the first one we're looking at is the trade balance month over month. MOM means month over month. I'm going to swipe to see if we have any questions in the chat. Guys, if you have any questions, please go ahead and ask me your questions in the chat. I'm constantly checking the chat to see if you guys have questions. All right. And a quick reminder for anyone that just joined, welcome to the session. The chat is subscriber only at the moment. What this means is for you to be able to send a message or a chat or use the live chat, you have to subscribe. And when you subscribe, just give it at least 1 minute for you to send a message. Okay, it keeps everything clean and focused. You can drop your questions anytime. I'll answer your questions as we go on. Now, trade balance, MOM means month over month, so every month, right? This one has already passed. It was released at 1:30 a.m. my time. You can see the previous valuation, 1.8 billion Australian dollars. The forecast was 3.8, the actual 3.9 billion Australian dollars. Okay, I'll explain what it means, but Octa has already given you definition, as you can see here. You can read this to understand what the trade balance means. Now, all right, you can read this to understand what the trade balance means. The trade balance shows you how much Australia sold to other countries versus how much it bought in. When a country sells more than it buys, we call it trade surplus. If it buys more than it sells, we call it... Give me a second, guys. All right, guys. Sorry about that. When a country sells more than it buys, we call it trade surplus. When it buys more than it sells, we call it trade deficit. Now, for Australia, this matter is a lot. It's a very interesting because it's a commodity-based economy, right? It sells gold, it sells iron ore, coal, a lot of raw materials. And when these exports are strong, other countries need to buy Australian dollars to pay for them. Remember, exports is when you're sending out to other countries. Imports is when you're buying from other countries. Now, when the exports are strong, other countries would need to buy Australian dollars to pay for them. And what does it do? It creates a demand for the Australian dollars. When the demand is high, it pushes the value of the Australian dollars higher, right? If the exportation reduces and the importation increases, less foreign money comes in and the Australian dollar can weaken in value. Okay, so basically what I'm trying to tell you is that if the trade balance number comes out higher than expected, just like it did right now, it usually means stronger exports and a healthier economy. So the Australian dollar would tend to rise. If it comes out lower than expected, when I mean expected, I'm talking about the forecast. The forecast is the expectation. If it comes out lower than the expectation, traders will read it as a sign that the demand for the Aussie dollar, or the Australian dollar rather, the demand for Australian dollar or Australian goods are slowing and the Australian dollar may reduce in value. Okay, so as a trader, you're using this data to gauge not just the Australian economy, but global economic momentum too, because if trade surplus reduce worldwide, it can just generally signal a slowing demand that can affect commodity currencies. What commodity currencies do we have? We have AUD as a commodity currency, we have CAD, and we have NZD as well. So this is basically positive for the Australian dollar. Another way you can find out is you just read the last sentence here. Octa provides a good explanation on the influence of this event. So if a steady demand in exchange for Australian exports is seen, it will turn positive. It's higher than the forecast and the previous, way higher than the previous as well. I think this is even more than ×2 of the previous, right? It's a huge turnover. It's a huge report for the Australian dollar, which would obviously be positive for the Australian dollar in the long term. All right. So that's that for the Australian trade balance. Let me know in the comments if you understood that analysis or that explanation. Let me know in the comment, guys. If you understood that, let me know in the comments. All right, we're going to go to Euro retail sales YOY means year over year. So basically, this is showing you the report for this year's September as compared to last year's September. So the retail sales measures how people in Europe spent on shopping compared to the same month last year. So groceries, electronics, clothes, online shopping, restaurants, all of it. Now, why is this important for you and for the euro as well? Retail spending is a big part of an economy. When a lot of people, spend money, businesses make money, they hire staff, they invest, and the economy grows. But if the spending reduces, businesses start to struggle, hiring will reduce, or basically even freeze. Sometimes they could even lay off some workers. So this number or this percentage or report shows consumer confidence and economic strength. Now, how do you understand it? If the retail sales are higher than last year, it shows you that there is strong consumer activity. It also shows you that the economy is holding up very well. The euro tends to increase in value. If it's lower, it means people are cutting back, maybe due to inflation or economic uncertainty, and the euro can weaken. But today, we got the same percentage from the previous, from last year, the same month last year. So we're not really expecting much of an impact from this report that we had today. It's 1%. The last time this news came out for this month last year, September last year, was 1% as well. So not so much change for the euro retail sales. All right. Okay, let's look at the interesting one. Well, they're all interesting, but GBP was on fire today. For those of you guys that traded GBP today, you'd have seen the volatility. We'll go to the charts and I'll show you guys that as well. So the first one we're looking at is the Bank of England, BOE. Whenever you see BOE, it means Bank of England. It's the central bank for, the United Kingdom, right? BOE interest rate decision. Now, this is just the Bank of England deciding what interest rates should be. And like I said, this is one of the most powerful events for the pound sterling. If the interest rate goes up, the pound usually strengthens. If the interest rate goes down, the pound usually weakens. Right? There's something called rate hike. We're going to look at the rate hikes as we get there. But sometimes you can see, just like now, you can see that the interest rate would be the same, but you'd see hints of rate hikes come up, and it's still bullish for the GBP. So if the interest rate stays the same, but you get to see hints for rate hikes, it's still bullish for the GBP. Now, you'd want to understand why the interest rate decision is important. The interest rates affect borrowing. The loans, business investment, inflation, anything that has to do with economic confidence. The interest rates also determines how attractive, this currency is for global investors, or any investor that holds any British assets. So the higher the interest rates, investors are going to get more return. They'll buy GBP would also increase. The lower the rates, less return, they'll sell GBP, and GBP reduces in value. All right. What is the BOE monetary policy summary? Now, think of like I told you guys, it's the central bank of the United Kingdom. It's like the money boss. Just like this, your institutions can have a principal that makes big decisions. The Bank of England makes big decisions about money and the economy. Now, the monetary policy summary is simply the bank saying, here's what happens, or here's what's happening with the money right now. Here's what we're doing about it. And the conversations involve things like inflation, when the price of things go up and increase, interest rates, which is how expensive it is for people to borrow money. They also talk about how strong or weak the economy is. And this is important because when the Bank of England talks about, things like this, GBP tends to move. Traders, investors, they all listen to this. So even if you don't want to pay attention to it as it's ongoing, it's good that you get a summary of what's going on with, the monetary policy, the interest rate decisions, just to know the direction and the strength and weakness, potential strength and weakness of GBP. If they say things like, oh, inflation is rising, we may need to increase the interest rates, that usually makes the GBP stronger, because higher interest rates would make investors want GBP because they will earn more on their investment. All right. So that's just, and again, you can always click on the economic events, whatever one it is, like this monetary policy report. You can see Octa gives you a definition. This is like the full story, the full detailed story behind the summary, right? This is the full detailed story behind the policy summary. Okay, it's just like when you submit your test or exams and then you get your results. So this is like your teacher telling you, this is why you got your result, this is why you got 20 points here, 10 points here. They just explain. But with the Bank of England, they're basically telling you, they're basically talking about how, you know, they predict the economy, the economic growth, inflation forecasts, future interest rate expectations, and generally global issues that affect the UK economy, you know, conflicts, oil markets, all that. So they're basically telling you this is why we either raised or increased the interest rates. Let me know in the chat if you guys are following. Let me know in the chat if you guys are following the session. And then we have the Bank of England. MPC means Monetary Policy Committee. The Bank of England MPC votes rate unchanged. Again, you can always read here. We had the previous for 7. The forecast is for 6. But the actual is 5. Now, imagine 9 adults, right, sitting in a very serious meeting talking about monetary policy. This is the Monetary Policy Committee. There are 9, and they get to decide whether to change the interest rates in the UK. Remember what interest rate is? It is how expensive it is to borrow money from the bank. If the interest rates are high, borrowing becomes expensive, but saving becomes rewarding because you get more interest when you save. If the interest rates are low, borrowing becomes cheaper and it encourages spending as well. Now, if you look at this report, we had the previous, the forecast, and the actual, which means 5 people. When you say unchanged, when you see unchanged, is to remain the same, to not change. So what we're seeing here is that 5 people wanted the rates to stay the same. The economists, the investors, you know, they expected 6 people to want it to stay the same. The last time this news was released, 7 people wanted it to stay the same. But now we're seeing that 5 people wanted these rates to stay the same. Now we're seeing that fewer members now want things unchanged compared to before, which means the bank is becoming less comfortable keeping things the same. So members are now saying that things need to change soon. And when there's less support for the rates to be unchanged, you know, this uncertainty can make GBP to start shaking. Then we also have the MPC vote rate cuts. Now this is the big signal. All right, as you can see here, the previous was 2, forecast 3, actual 4. What this means is that more people now want the rates to be cut than before. Last time, only 2 people wanted the rates to be cut. This time, 4 people. That's double. Economists, and based on forecast, 3 was the expectation, but now we have 4, which means the bank is becoming more dovish. They're leaning more to cutting the rates. More people want to make, you know, borrowing cheaper. Let me know in the comments if you guys understand. When there's rate cut, it supports growing, but GBP weakens. And then we have the rate hikes. Nobody wants to raise the rate. You can see 0, 0, 0. Nobody wants to raise the rates. Not even the last time, not this time, and it was not even expected. So raising the rates is not even at the table anymore. All right. Okay. So just to simply summarize everything with the monetary policy report and the rates, the money boss, which is the Bank of England, you know, they are slowly shifting from let's leave things alone to maybe it's time to start cutting the rates, which means the UK economy might be slowing, inflation is coming, borrowing might be cheaper in the future, and the GBP might lose strength in the coming weeks. All right, this is just a summary to, what's the reports that have been released today and everything I just said. For these speeches, it's very important for you to pay attention to the speeches from the governors of these various central banks. When these governors speak, the markets tend to listen hard. They talk about interest rates, the strength of the economy, inflation, just a lot of things that can give you hints on, potential direction for even the future reports and the currency itself at that time. Okay. BOC is Bank of Canada. For those of you that don't know, this is Bank of Canada, just like you have Bank of England. Again, you obviously talk about inflation, jobs, interest rates, economic future. You just pay attention to see if it sounds a bit aggressive about fighting the inflation. You can use that to know that, if it's aggressive about fighting inflation, then the CAD could gain some strength. Just like that, that's how we get to understand these various economic events and trade accordingly. Again, it's very important so that you don't go to the charts and trade blindly or get, pushed out of the markets just because you missed out on an economic event. But let me know in the chat if you guys understood the analysis. We're going to go straight to the charts right now, and I'll talk about technical analysis. But if you understood that, okay, I see a lot of people saying, yes, I do explain in details. Very well. All right. Perfect. Now we're on the charts right now. Before I even go ahead to start analyzing, let me ask you guys this question. Let me throw the question in the chat. What's your favorite pair to trade? What is your favorite pair to trade? Let me know in the chat. Mine is gold, right? I believe I'm going to see gold in the chat as well. But before we even look at gold, we're going to start with something really, really interesting, which is called the DXY. The DXY is the dollar index. So what is the dollar index? The US dollar index, this is just the dollar, right? It helps you, or it measures the value of the dollar itself compared to a basket of 6 major currencies. The DXY, or the dollar index, measures the value of the US dollar compared to a basket of 6 major currencies. Which currencies are these? We have the euro, which is the biggest part of the index. We have JPY, we have GBP, CAD, Swedish krona, and the Swiss franc. So how does this work generally? If the dollar index goes up, it means that the US dollar is getting stronger compared to these currencies. If the dollar index goes down, it means the US dollar is getting weaker compared to these currencies. Let me know in the chat if you're following. So let's do a quick analysis. I already have the zones mapped out, but I'm just going to do a run down for everyone so that you can know what to look out for if you trade dollar related pairs. Okay, I asked you guys your favorite pairs, and some of you said GBP USD, US oil, very interesting. US oil, amazing. Euro USD, USD JPY, GBP USD, amazing. Now we're going to look at, I'm seeing a lot of USD, so it's only good that I talk about the dollar index. Now, the last time we looked at the dollar index, we talked about how it has been trading below this point. And I told you guys that as long as it trades below this key level, we're bearish, right? But something interesting has happened right now. Now, remember, the goal is to trade what you see, not what you think. A lot of you guys will ask why. Well, the reason is because the market doesn't care about you, doesn't care about what you think. It doesn't know how much you're trading, doesn't care, right? Which is exactly why you should follow what you're seeing with your eyes instead of what you think, what you hope, or what you expect. So what do we see? We can clearly see that the market has created on the dollar index a double bottom, which is a reversal pattern, right? This tells you that the market tried to break below this point the first time, couldn't, created a support level here, came down to try again and break below, it couldn't, confirmed the strength of this support, and now we have this nice bounce that has taken us all the way above this key level. Guys, I'm going to be calling it key levels, okay? I know that, you know, these are supply and demand zones, support and resistance, all that, but I just like to call them key levels because they are key levels, okay? I like to keep it simple. Now, the last time we looked at this dollar index, I told you guys, as long as we keep trading below this key level, we're still bearish, right? The dollar index broke above it, retested this trend line, came to the key level, made the first retest, broke above in the second retest. What does this tell us? It tells us that this whole bearish idea we have right now has changed. The structure has changed. The market is not as bearish as it was before and as we expect it to be, because we have now broken out of a major level. This level has been tested a couple times with no sustained break, and now we've successfully broken above it. So what are we looking out for? A sustained break. Why? Because when you look to the left hand side, you'll see that yes, this break was successful, but there was a time the market was at this point and it didn't break above it. This one is already mapped. I don't need to map it again, it's right there, but this is the most recent swing, right? The market, guys, give me a second. The market has already made a retest at this point. The market has already made a retest at this swing high, and we're seeing another retest right here. I just want to be sure you guys can hear me and you guys are catching and following the session. At this second retest, it is still not a strong confirmation that the dollar is entirely bullish, but what this tells us is that it is changing from bearish to bullish. In a double bottom formation, right, there's something that we call the neckline. The neckline serves as the resistance of the double bottom. When the market successfully breaks above that neckline, that's when you can confirm a change in trajectory. Usually, we can have something like this. The market, you know, make the double bottom, first bottom, second bottom, and then comes down here before we go to the top down here. Because this is an area of interest for us. This is also an area of interest for us as well. So yes, the dollar is not as bearish as we were trading in the past few weeks, but we need a confirmation that bend that we're seeing right here is strong enough to take us all the way to the top side. Again, this is the dollar index. So whatever happens here, you reflect on Euro USD GBP, reflect on Euro USD GBP USD as well, majorly, right? There are other pairs, but majorly GBP USD, Euro USD, USD CAD as well. All right, USD CAD as well. All right. Give me a second, guys. All right. So guys, if you have any questions concerning the dollar index before I go over to gold and other pairs, let me know in the chat. But the summary of the dollar index is basically the downtrend has now begun to change. When you see this formation, when you see, you know the famous saying, the trend is your friend until it bends. This is the bend, right? We're not seeing the market create, the market is now coming to take out all the lower highs that it created. If you guys are familiar with trend trading, you would remember that a downtrend is made up of a series of lower highs and lower lows. All right. But when the market starts to take out the lower highs like this, and it doesn't create lower lows, new lower lows, then you get to see that the market is to bend. So if you've got questions, let me know in the chat. So the dollar index is basically bending from bearish to bullish. We just need the confirmation. What's the confirmation we need? We need the market to take out this previous highs that we have right here, okay? This break has been successful. We just need it to be sustained. And before this is taken out, the market could also push back down before it goes back up. It's normal. It happens. After every impulsive move, we get a retracement. Okay? But if we trade above this our key level that I just created right now, all I'll be looking for on dollar pairs would be buy opportunities. Because that bearish trend has now taken a different turn. Somebody is saying the dollar index, my level pair, been a win streak since I understand the dollar index correlation to other pairs. Amazing. Then the dollar index. Once you understand this correlation, it just becomes less difficult to trade, GBP USD and Euro USD. It just becomes less difficult to trade GBP USD and Euro USD. If you're looking for buy opportunities on the dollar index, it means on GBP USD. Do you guys trade gold? And you'll be wondering what's next for gold right now. Guys, for your screen, these lines go all the way to the lower time frames, you know. It goes all the way to the 5 minutes, the 15 minutes time frames. Gold is my favorite pair to trade, just because I understand it now. It takes some time to understand gold, but once you do, you know, it becomes less complex. All right. Currently, we are seeing a market that is consolidating. Okay, I can extend this consolidation to this point just because there are still chances of gold coming to touch this highs, this swing highs. But right now, this is a consolidating market, so you can identify the highs and the lows and trade the bounce of these highs and lows. But currently, it's a consolidating market. We are sitting at a key level and a very important level, right? That if we break below these levels, then we're looking for sell opportunities on gold. If we break above these levels, we're looking for buy opportunities on gold. But currently it's consolidating, it's not trending. When the market was, you know, creating all these highs and lows, I told you guys about how you can look for buy opportunities. We're creating new all-time highs like every day. Gold was creating all-time highs every day. But right now, to exit, yes, this looks like a lower high and lower low, but come and go, right? So I'm going to show you guys how you can grow in November, okay? If you've got questions concerning the fundamental technical aspect of today's session, you can ask. After this, we're going to the Q&A section of today's live trading session. I'll answer all your questions. So how do you grow in November? First, you want to start with a clear goal. Trade to grow, not to impress. Set a monthly return, right? A monthly target. Daily targets are good, but focus on the monthly targets. The monthly targets gives you an overall view on, you know, consistency and longevity. Set a maximum risk limit. If you're starting and you're a bit shaky with your strategies, reduce your risk per trade to 1 or 2% and focus on the process, not the profits. A lot of traders, you know, blow their accounts because they chase quick profits. So this month, you have to grow by focusing on steady progress, not the flashy wins. Okay, set a target like 5-10% for the month, not 100%. You can set 20% for the month, not 100%. Most professionals, you know, think long term. The next thing you want to do is to create a trading routine. Guys, success is built on habits. So review the market news every morning. Mark the key levels on your charts. Pick your trading sessions. If you're trading the London session, New York session, Tokyo session, Sydney session. Choose your session and journal after each trade. In these markets, consistency doesn't come from talent, it comes from routine. So when you repeat these good habits every day, you remove emotional and just rash decisions, and your entire November now becomes more calm and structured and predictable as well. Let me know in the chat if you guys are following. The third thing is to only trade high probability setups. If it's not clear, don't trade it. So wait for your setup. You don't need to guess in these markets. No guessing. Wait for your setup. Trade when price aligns with your strategy. No revenge trades. Okay. Focus on high quality trades. Remember, you don't get paid for the number of trades. You don't get paid for trading 1,000 trades in a day. You get paid for taking good trades. And when you're patient, okay, so the market is always giving away chances and opportunities. All you have to do is to wait for your spots. The next thing you want to do to grow in November is to control your risk with discipline. Protect your capital like your life depends on it. 1 or 2% risk per trade. Use a stop loss. Don't adjust your stop loss every time out of fear. And have a risk target. So let's say you have 2 drawdowns in a day. You can trade the next day. Profitable months don't, when you want to have a profitable month, it won't come from bad days. It won't come from, getting super agitated on bad days. It comes from controlling your risk. It keeps you in this business long enough to be profitable. And your only advantage you have in November is discipline. The next thing you want to do is to track everything. Whatever it is you measure improves. Track your profits, track the losses, track the setups, track your emotional decisions, track the mistakes, track the things that makes you improve. You can do that with a trading journal. Your trading journal should be like your coach. It shows you your strengths, it shows you your weaknesses, and when you review your trades daily and weekly, you become more self-aware, and that's how you level up like a trader. And the next thing you want to do is to master your mind. Now, you can always come back to this video to learn everything that I've said today. The video is going to be saved on the Octa Broker website, or YouTube channel rather. You can come back and watch the video. Your mindset is your weapon. Drawdowns in these markets are an integral part of trading. They're normal. Focus on your goals. Stay calm and patient. Stick to your plan even when you're tempted, because the market will tempt you a lot. I know when you guys read this market, you assume, well, the market tends to beat us. The market tends to go hard on. It's not the market, it's your emotions. A calm mind, not a stressed mind. And finally, you want to execute with confidence. When your criteria is met, when your confluences are aligned, execute. Okay, be decisive, don't hesitate. Trust your strategy, follow your plan, not your feelings. Follow your plan, not your feelings. Trade what you see, not what you think. Review weekly and adjust slowly. Market conditions. It reduces your confidence more than market conditions. So train your mind to execute when your rules align and act with clarity. All right, November shouldn't be a month to make rash decisions, but it should be a month that you get to build discipline. You grow slowly, and the results would follow as well. All right, so this is it. You can always come back to this video. We're going to go straight into the Q&A session right now. So if you've got questions, go ahead and ask me your questions. Go ahead and ask me your questions in the chat if you've got questions. And while you do that, if you haven't downloaded it already, you can use the link in the description to download the Octa trading app. It offers a wide range of trading instruments with low spreads, fast execution, and zero commission. It also has various educational resources, 24/7 customer support, and a strong commitment to fund and data security. Now, if you made it up to this point, congratulations. You get to see and receive the promo code that gives you a 100% bonus on your deposits. The promo code is Ambrose E100. So you open the Octa app or visit the official website, go to your profile, find the promo code section in the menu, enter the promo code and press activate. You can go ahead and make your deposit and enjoy your bonus. Ambrose E100, you can use that to receive 100% bonus on your deposit. There would also be an indication on the volume you can trade or you should trade to receive your bonus to your wallet. When I mean wallet, your Octa wallet, or you can withdraw that to your trading account or your bank account as well. So, Q&A session, guys. Let's go. Ask me questions. If I don't get so much questions, I'll just assume that this was a very comprehensive session. So if it was, you can also let me know in the chat as well. Questions, guys. While you guys are asking your question, I'm going to ask you guys one or two questions, maybe one question. What are, just you can tell me what is one currency, at least one currency that makes up the dollar index? So the dollar index is US dollar compared to 6 currencies. Tell me at least one of those 6 currencies in the comments. Six currencies are used to compare the dollar, right? With the dollar index. So what is one of those 6 currencies? Can you explain what the Fibonacci and let's say the 50 period moving average is? I'll briefly do that. Just so you can get an understanding of what it is. Let's go to, let's see if we have a clear chart. So the Fibonacci tool is basically, it's mostly used to catch retracements in trends, right? They call it the Fibonacci retracement tool. You can use it to catch retracement. You can use it to hop on a continuous trend as well. Basically, we have these main points or these main ratios, and then we have 61.8 as the golden ratio, right? What this means is when the market retraces to these levels, you should prepare. If it's a bearish market that retraces to this level, you should prepare to sell the market. But I like to wait for 78.6. It doesn't always get there most of the time, but this is the ratio or the percentage that I like to trade. So if the market is coming down and it pushes back to retrace at 50%, comes all the way to 61.8, a lot of traders get in here, which is still cool, but I like to wait for this point, right? If it breaks above this point, I just know that that trade is invalid, and I don't start to look for sell opportunities there again. So for me, I use 78.6, but you can screenshot this and adjust your Fibonacci to look like this. For the 50 MA that you asked, the moving average, it's MA is called moving average, right? We have the exponential and the simple moving average. The exponential moving average pays close attention to what's going on in the market, just like we have the 9 period exponential moving average right here. If I increase it to, let's say, 50 period, you see that it's going to adjust. So basically what the moving average does is it gives you the average price. So if it's the 9 period, or in this case, the average price of the last 50 candlesticks on the 4-hour time frame. So even if the chart is not there, you can just use only the moving average to, it kind of smoothens the trend basically. It basically smoothens the trend. As you can see, it smoothens the trend. All right. So let me know if you understood the Fibonacci explanation and the moving average explanation as well. USDJPY. Let's see what's going on with USDJPY right now. USJPY is pretty interesting. Again, the dollar is gaining some strength, so obviously you would see bullish momentum over here. I don't really look much at USJPY, but let's see what we can do here. So first, I'm going to identify the area. I can already see it. Consolidation, the breakout, retest, upward movement. To the top side, we had a retest here. Wow, the market is sitting at an interesting level, an area of interest. What this means is we could potentially see USJPY, you know, come down to trade up below this point a bit, maybe take out some surpluses here before coming back to the top side, right? But and which is obviously what I'll be, if I'm trading USJPY, that's what I'll be looking out for, the market to push back down a bit, and I'll look for buy opportunities around this level. So if you trade USJPY, this is the 4-hour time frame. This is where you'll be looking out for buy opportunities. But if we break below this point, right, then your buy opportunities become invalid, except something happens with the news. Okay, but below this point, we're back into the consolidation zone. All right, so that was a quick one for you, VAB View 123. I hope you understand the analysis. And yeah, everyone, thank you guys so much for joining today's session. It was really an amazing session with you guys. Every session we have with you guys is amazing. Take one moment, please, to fill out the survey. Your feedback is essential for us to improve future webinars. This survey will take only 1 minute. You can scan the QR code on your screen, or you can use the link in the description. Once again, guys, thank you for joining, and I'll see you all next time. Bye, everyone. Yep.